Welcome to the Retiring Canada podcast, where our mission is to educate and empower you to make the most informed, rational, and productive financial decisions. Hosted by certified financial planner, author, and chartered investment manager Michael Isbister. You'll go behind the scenes to uncover the tips and strategies to help you invest smarter, optimize your retirement income, and reduce the amount of tax you pay. Michael is an investment advisor with Fundamental Wealth, a trade name of Harbourfront Wealth Management, a CRA dealer. And now, here's your host, Michael Isbister.
Hello everyone, and welcome again to the Retiring Canada podcast. In today's episode, we're going to discuss 3 tips to help streamline your tax filing. Specifically, I'm going to chat about 2025 tax filing issues, 3 tips to help with your tax filing, 1 online account everyone should have access to, 3 tax planning value adds that make your life easier, and lastly, as always, a few action items for you to consider. With tax season right around the corner, it's a good time to have a quick chat about the upcoming tax filing deadline and some tips and best practices you should consider. As a reminder, the personal tax filing deadline is April 30th, and if you are self-employed and still working, your deadline is June 15th. As most of you are aware, tax slip distribution and mailing was a nightmare in 2025. Late tax slips, reassessments, interest arrears, and installment requests are just a few of the hurdles retirement taxpayers faced when filing their tax return in 2025. T4A slips were delayed by technical difficulties, meaning that retirees waited for tax information from their pensions and annuities. CRA introduced a new electronic filing and validation system that caused formatting errors and submission delays for employers, pension funds, financial institutions, and investment fund companies. Most notably, for retirees with large non-registered accounts, that generated T3 and T5 slips, which in some cases were not uploaded to CRA until May. For those of you who use your My Account, slips did not show up as quickly as years past, again pushing back when Canadians could file their taxes. The Canada Post strike further complicated mailing timelines and expected slip delivery dates. Then came the reassessments. When these new slips showed up and were not accounted for during the original tax filing, tax owing and interest arrears followed. It was a mess. To help avoid the pain of getting reassessed and the sting of interest arrears and additional accounting fees, I have 3 suggestions that I hope will help you. Number 1, create a My Account with CRA if you've not done so already. This is different than a My Service Canada account, which handles your CPP, OAS, and employment insurance. A My Account will make your life easier in a multitude of ways. You can view your RRSP and TFSA balances, statement of account balances, notices, installment reminders, previous tax year slips, and much, much more. You can also use this access to track the progress of the slips received and compare them to previous tax years. As a value add for our clients, we request disclosure-only access to our client's My Account. What this means is that we have the ability to look at things like your TFSA contribution room, RRSP room, previous slips, notices of assessment, and more. We find our clients appreciate the fact that we can do all of this heavy lifting for them, rather than giving them more homework that gets pushed onto them. An advisor having access to a client's My Account with CRA is not common. Not because it's not a wise thing to do, but because most advisors don't do the legwork to help clients optimize their taxes. Just the other day, I chatted with a client who has 7 figures with our firm and 7 figures with another firm. The client's TFSA is at the other institution, and they asked the client to call CRA to determine their TFSA room. We all know how lovely it is to call the CRA helpline. Well, luckily for the client, we have access to their My Account and brought to the client's attention that the TFSA contribution room that they have has actually been missed for the last 3 years by the other advisor. Bottom line, having CRA access gives our clients time back in their day and ensures the accuracy of our advice. Suggestion number 2, wait. I cannot stress this one enough. Many people rush to file their taxes as soon as possible, only to find more slips arrive in their mailbox after they've dropped off their taxes at the accountant. Most all slips have a filing deadline for the investment or pension companies or wealth management firms, etc., and they're supposed to follow those dates. With the latest slips usually being the T3 slips with an end of March filing deadline. If you have a non-registered investment account, these are likely the last slips you will receive. In 2025, some of these slips were not received well into May. Now, 2025 appears to be an anomaly with the Canada Post strikes and a massive system update by CRA. But again, the best practice most Canadians should follow is to simply calm your urge to file your taxes and wait. If you're eager to file or you typically receive a large amount of slips, my last suggestion will be a game changer. And that is to create a checklist of slips you expect to receive. To do this, first have a look at last year and jot down all the slips you received. Next, take a look at your non-registered investment account and determine the number of T3 slips you will receive from various mutual fund or ETF holdings. If your investments are the same as last year and no transactions have taken place, the number of slips will likely be the same. If you or your advisor added investment positions to the non-registered account during that calendar year, there is a chance you will receive a new slip if there were any kind of investment distributions. And then lastly, if the non-registered account has individual stock or say a GIC within the account, you will also receive a T5 directly from the custodian of your account. Another crucial item to track when it comes to your non-registered account is to ensure that you're properly deducting the advisory fees you're being charged. When we go through our clients' tax returns, there have been a number of occasions where we have caught an error or missed entry by an accountant. Whether it be a missed slip or forgetting to deduct carrying charges, we think it's wise to have a couple sets of eyes on things. Now, if you don't want to create a checklist yourself and you work with an advisor, ask your advisor to provide you a checklist of all the slips you can expect from their firm so you can monitor the progress as you go through tax time. This year, our team is implementing one such checklist for clients. This checklist is customized to each household and details what slips they can expect from our firm and from the investment companies we utilize in our portfolios. We are very excited to roll this out to clients this year, and we just think it provides a tremendous amount of value for our clients and will help to reduce errors, protect our clients' time, and make their accountant's life easier. Now, while we're on this topic of value adds we provide for clients, for households with corporate investment accounts, we've been rolling out a tax package for their corporate accountants. This helps to streamline our business operations and communications, protect our clients' time, and actively collaborate with their other professionals. And lastly, for our retirees, every fall we put together our fall tax letter that outlines their customized strategies to reduce tax and optimize their retirement income. In the description of this episode, I will link to a sample of our spring tax slip checklist and the fall tax strategy letter that we tailor for clients. I won't be able to provide an example of the tax package we create for corporations, but in short, this is a detailed breakdown of the transactions within the corporation for that fiscal year, T-slips, and statements to name a few. Now, as you've probably gathered, we care a lot about our clients' taxes, whether it be finding ways to optimize taxes year over year to create a sustainable retirement income, collaborating with their tax professionals, or being a second set of eyes on their tax filing accuracy. We believe strongly that the role of an advisor goes well beyond simply picking investments. If you pay for financial advice, you deserve a team of professionals who will coordinate not only with CRA, but also your accountant to make this time of year as seamless as possible. Now, before I jump into action items today, I want to share something on a personal note. On January 31st, my wife and I welcomed our third child to this world, beautiful little Naomi. That makes 2 boys and a girl for our little family. Now, I did something I haven't done since I started in this industry nearly 15 years ago. I took 3 weeks off work and had my team and business partners handle my clients and business while I was away. Personally, I find it exceptionally difficult not to be working, and admittedly, it took some time to adjust. That said, I'm just so very grateful for the life and career and business that I have that allows me the flexibility to prioritize my family. These last 3 weeks that I did take off gave me some perspective that I want to share with you. First, it gave me the time to zoom out on my work and focus on my family, while admittedly giving me the headspace to think big picture. Not only for the life my wife and I want to build with our children, but also what kind of business do we want to build? What is the point of all this if I can't take time off without feeling like something is missing? And second, it made me think about you, the retiree. I sit across the desk and at kitchen tables of retirees every day. And while I know a great deal about retirement planning, taxes, investments, and the like, understanding the emotional aspect of retirement can be hard to grasp. Letting go of the person you once were and starting the next chapter can stir up emotions most never thought they would experience. My time off, albeit only 3 weeks, was a slap in the face, to be completely frank with you, and I mean it in a positive way. I've wrapped up so much of my life in my work that the thought of retirement for myself in the very distant future is incredibly hard to fathom. Many of you listening may not feel this way about your work or career and could step away relatively easy from the day-to-day of work. But for those of you whose work has come to define you, I understand. My hope for you as you near retirement is to have faith that you will find purpose in the next chapter. And while it may take some time and effort to find that purpose, you will find it. Okay, so that'll do it for today's episode. Here are your action items for today. First off, if you have typically get a bunch of tax slip each and every year, and you got reassessed in 2025, I strongly suggest you create a checklist. Log into your My Account or create an account and have a look at what slips you received last year. If everything is in a folder, break it out and make a list. This is a great starting point. If things have changed from an income or investment standpoint, there is a chance some new slips may be on their way. Next is wait. This is probably the simplest way to reduce the probability of error. Wait, check the mail, call your advisor, review your checklist, and file when you have everything. Lastly, if you're thinking about retirement but finding it difficult to envision life after work or after selling your business, don't wait for this to be thrusted upon you. Make it a priority to plan for your next chapter and find purpose, just as we plan for creating your retirement paycheck. Both exercises are best planned for a number of years leading up to retirement and not a last-minute decision. Okay, so that'll do it for today's episode. Make sure you add us on all your socials, LinkedIn and Facebook. Be sure to check out the show notes for the sample tax letters that I've discussed in today's episode. If you're enjoying the show, please subscribe and leave us a 5-star review in your favorite podcast app. Be sure you're signed up for our weekly Retiring Canada newsletter. And hey, when it comes to your retirement, don't take chances. Make a plan so you can retire with confidence.
All comments are of a general nature and should not be relied upon as individual advice. The views and opinions expressed in this commentary may not necessarily reflect those of Harbourfront Wealth Management. While every attempt is made to ensure accuracy, facts and figures are not guaranteed. The content is not intended to be a substitute for professional investing or tax advice. Please seek advice from your accountant regarding anything raised in the content of the podcast regarding your individual tax situation. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.